Okay, so today we're going to go over market structure and the basics of market structure. This will help you to understand ranges better and get a directional bias so you can be on the right side of markets more times than not. So on the left here, we have a bullish example and the schematic of it. On the right, we have a bearish example, right? So let's look at the bullish one first. First off, we have a low, then a high, and then when bullish, the market is going to retrace, form a higher low, and then break that high with a new higher high. Now when this high gets broken, it's called a break of structure. In short, BOS, right? And then once we have the higher low and the higher high formed, we expect a higher low leading to a new higher high, right? So when bullish, market goes from bullish impulse to bearish pullback to bullish impulse, and then we expect the bearish pullback after the BOS, and then after the bearish pullback, we will expect another bullish impulse. Okay, so when bullish, the lows we consider them strong because the lows broke the highs, right? The lows are considered strong lows. The highs are considered weak highs because the highs did not break the lows. Okay, so strong lows, weak highs. This is what we expect in a bullish scenario. Okay, so in this case, the pro trend direction will be long because we expect a long after the pullback, right? So the pro trend is long, the counter trend is short because after the long, we expect some sort of a pullback, and the pullback direction is going down, right? So it's a short counter trend short. Pro trend would be long. Okay, so this is going to be a bullish scenario. Now let's quickly jump over to the bearish one. So over here we have a high and a low, and then we have a bullish pullback leading to a bearish impulse, breaking the low with a break of structure, right? So this is going to be our lower high that led to the lower low, and this low getting taken out is our break of structure, right? So after we have the break of structure, we have our trading range, which is here to here. Okay, we expect a pullback and then breaking that low here with another lower low. Okay, so with that said, once that low gets broken here, this is our break of structure. Okay, and then this is our lower high that broke that low, and then we expect some sort of bullish pullback and then another bearish impulse to continue, right? That's our expectation. Oops, sorry about that. But sometimes we can get a flip, right? So let's quickly go over what happens in a flip. So when we flip from bearish to bullish, what happens is we have this high over here. Let's just map it out like so. And then we get the low. This low will start a pullback, right? We are expecting the pullback up to break the low. But sometimes we can get a flip because markets don't trend lower forever. At some point, it needs to break bullish and oscillate, right? So once we break this high over here, like so, this is going to be my 15-minute break structure. We broke it higher. So officially, market structure is bullish, right? In this case, our expectation goes from bearish to bullish, where we expect a bearish pullback leading to a new bullish impulse, like so. So with that said, let's quickly jump over the chart and see how it looks like in a live chart. So let's quickly go over time frames first. The time frames that I use to map out structure will be 4 hour and 15. 4 hour is just to get an overall directional bias, and 15 is to get an intraday directional bias. Okay, so the way we map structure is look for a low. Okay, in this case we have a low here. Let's change colors. For the 4 hour, I'll use red. So this low led to this high, right? Then we have a pullback, and then we have a new high breaking, like so, right? So this is going to be bullish for me on the 4 hour, and then I expect a pullback after the break of structure, like so, into new highs, right? So this is the low that led to this high breaking there. So this low led to that high, and since we're not pulling back, we sort of have a floating high. So we need to say that we don't know where the higher high is going to form. So we keep that in the back of our mind, that at any point the higher high can be set in and we start a pullback. So you don't want to force a bias. You don't want to say, okay, the higher high is here, let me go short. That's not smart, right? You want to wait for your confirmations that the higher high is actually set in place before you go short. Otherwise, you're just neutral or slightly bullish, all right? So if that's it, let's jump into the 15-minute chart. Okay, zooming in. Okay, so obviously we see this low and that high, right? So let's just highlight this high, right? A 15-minute, let's mark it in blue. So this high led to a pullback, and then eventually the high got broken here, right? So this is the pullback that led to this high breaking. So this would be before I mark that, this would be the breaker structure, right, on the 15-minute chart. And then after the breaker structure, we expect a higher high set in place and then a pullback, right? In this case, this is our higher high that started the pullback. Okay, higher high led to the start of the pullback. So once we have that, what I like to map out is I map out my swing structure like so. This is my high, right? This is my low. So in this case, I know that I have a range to work inside, right? My range is from here to here. I expect the pullback to set in after the breaker structure, right? I expect some sort of pullback, not breaking this low, but let me clean it up. Not breaking that low, but a pullback, and then we break that high again because we are bullish, right? So at some point we set in the lower low, sorry, the higher low that broke that higher high, and let's mark it out like so because that's the highest high. And then we have our break of structure like so. Okay, so if that's set, we can trail our structure over here to this point, because this is the lowest low that broke that high. This is our structure point, right? Oops, do it properly, like so. Yep, this is my swing structure low, and then this is my 15-minute structure point. Why? Because this high started the pullback, right? And then, like I said, if you're confused, you can map it out, no problem, right? And then since we are bullish, right? Since we're bullish like so, we expect the pullback to break that high, right? But in this case, we got the flip, right? So instead of going bullish, we broke the structure low bearish, like so. So it's fine, no problem. We map it out, right? So once we break the structure, this was the high that led to that low breaking. So our strong high, our weak low, right? So from this point onwards, since we got that break, our bias is flipped from bullish to bearish, right? So anytime you can get short, you know that's the pro trend direction. Anytime you want to get long, you need to understand that's counter trend, right? Not to say that you can't get long, but you just need to be a little bit more aggressive with the profit taking, I would say, because the lower high could set in at any point, and then you get the lower low, right? And you don't want your head smashed, so that's the point, right? So this is the low that started the pullback. So this is my structure point low, my lower low. Then we got the lower high and the lower low, right? And you can trail structure here. So I think you guys get the point. I'm not going to bother trailing it anymore. So this is the breaker structure, right? So here we got the pullback, and then we got the break. So this is our structure point, the highest high that broke that low. And then this is the low that started the pullback. So this is the low, like here. And then you're trading inside of this range, right? So you don't really want to care anything that have any POI you have above the range and below the range, because you're only working in this range. Every POI you want to look at is inside this range. You don't need to look at anywhere else, right? And you know the direction is short, so you want to look for some sort of bearish POI to get short, and you're expecting this low to break, right? So eventually you pull it back here, and then the low broke here, right? So we broke that low. Of course, you can map your structure like so, right? Because that is a low that broke this low. That is a valid pullback, and then you break that low. You can do it, or you can consolidate into one leg. It depends on how you like to map it. So let's say I map it like this, right? So my structure range is going to go from here to here, right? And like I said previously, if you are confused, you don't really know where you're supposed to be looking at, I'll map it out for you, right? You can keep this on a chart too, just so you know that where you are in the range, right? So you know that, okay, my structure range is here. I'm only looking for POIs inside this range, right? Until we actually get the flip. And until we get that flip, I'm remaining bearish, right? Anytime I want to go short, that's where I should be focusing on. Longs are just a pullback, right? So extend this line further, and then you got wicked out. Now, wicks don't count as a breaker structure for me. I'll count breaker structure when we actually get the full body closure, right? So over here, we got the breaker structure here. And then this is the point that actually broke the structure here, not this, because this high is higher than that high, right? This is the one that actually broke this low. So your structure is going to be here, right? So yeah, I'm not going to bother trailing it anymore. I think you guys really get the point. So high, left of the low, over here, right? And then you actually get the flip, right? Bullish. So after the flip bullish, you expect any pullback. It's just a normal retracement, right? Any bearish move is just a normal pullback or a retracement, and then you will eventually get that higher high, right? Above this high, right? So anytime you're below this high, you're looking to get long, right? Target this. And anytime you get above that, with confirmations, you're trying to get short, trying to get a little piece of the pullback, right? Or you can just ignore the pullback and say, I don't really care about the pullback, it's too risky for me, I just want to get pro trend. You can do it, right? Anytime you're below this high, you look to get long, okay? So the pullback ended there, and then we got this break here, right? So okay, so we eventually got the break and a pullback, very shallow, but still a pullback. The pullback doesn't need to be very, very deep to be considered a valid pullback, right? Pullback here, the lowest low is here before you got the pullback, right? So from here to here, and then you actually got that break here, right? And then this is where we actually get the flip, right? Because we actually did lay a body above that structure point. See, barely laid a body over it, but still counts for me. This is now officially bullish, right? But in this case, we swept this. We actually just took the liquidity above this high, the buy side liquidity above this high, and then we broke this low again, okay? So if you were to ask me at the time of trade, do I know that it's just taking that liquidity out, and or am I officially bullish? Well, that requires a lot more tools, a lot more advanced concepts on the higher time frame, the lower time frame and stuff, which we'll go over in the future. But for the sake of this video, we're just gonna anticipate it to be bullish, but we were wrong, right? We actually broke the law. So we actually broke that law. So now we're bearish. So and then let me check. Yeah, we actually broke that low, and then we broke that high again, right? Which is over here, right? Then again, if you look, barely closed above. Very, very minor, right? Barely closed above. That counts for me. So officially we're bullish, right? And then we got slapped again, bearish. It's fine, right? You're never going to be 100% in trading, right? Not every tool can give you 100% strike rate, but the way you combine these different concepts, which we'll go over in the future, will tell you that, okay, this area is not that high probability it's going to go through. You're going to look for a short, right? And then this area in here, which originally we will consider some sort of a strong low, is actually not that strong, right? Because we have something failing here, right? So we broke this low, and then broke a high here, pull back, and then this is the high that started the pullback, right? So high to low, broke again here, pulls back, and then broke that high again, right? Like so. So this is my structure point. That's a low, that's a high breaking. That low got broken here, so low to high to low, right? A little bit more tight, but still counts as structure for me. And then when we flip, the point is actually this, not this one, because the structure point is actually over here, right? So we actually broke that high here, bullish, pulls back, bullish. Let me zoom in a little bit more. So bullish break here. Here, this is my structure point. Now we start to pull back, pull back, pull back, deep pullback. So again, going over it. This is my high, right? Anytime you're below that high, you're looking to get long. Now, sometimes the pullback, you expect it to end here, but it doesn't quite break that high. So this is not the end of the pullback. The point that broke the high is the end of the pullback, and this is my structure point, right? This is my valid structure point. And then once we lay the body over it, this is my valid break of structure, like so. So low, led to this high, and then a pullback, right? So, excuse me, structure point, structure point, structure point, pulls back, structure point, pulls back, right? A little bit tight, but still counts as structure. And then we have a low that led to that high. Sorry about that. Low led to that high, like so. And then we eventually laid a body below, right? Break of structure, right? Laid a body below, so that counts as break of structure for me. And then once we have this break of structure, we went from bullish, flip to bearish. We expect a bullish pullback into a new bearish impulse, right? So high, broke the low. So this is my structure point. This low led to this high, and then we get the flip again. And then we're currently just trading inside this range, right? So I hope you guys learned something, and I hope to see you guys in the next video. Cheers.